Welcome, everybody. Happy Wednesday. I'm excited to see everybody joining in this afternoon. In case we have not met before, my name is Melissa Langdale, and I'm the founder and CEO of Praxis Lending Solutions. And we are a premier mortgage consulting firm that is on a mission. And our mission is actually very simple. It's to leverage technology and intentional workflow design to lower the cost of origination for every lender that we work with. And so, as you can imagine, I spend a lot of my time talking with lenders about intentionally designing their company and their operations and their workflow for the future of what's coming for our industry. And so that is actually why this series was started, was to help prepare the companies that I work with and the industry for the future of mortgage lending. So excited to share that with you guys today. Before we get started, I want to welcome James Duncan to come and join me for a second. James is the founder of Kylum Advisors and our production partner for this series. So James, tell us a little bit about Kylum Advisors.
Well, the whole purpose of Kylum is to help level up the expectations that people have in the mortgage industry of what great marketing strategy looks like. There's a lot of people who think they know what great marketing strategy is, but they really miss the boat. There's a lot of things that we can do in helping tell a more compelling story to consumers, and to help generate more business, to help track ROI. One of the key offerings that a lot of people have gravitated to lately, since I started, I'm currently rounding out month 2, but a lot of folks have been very interested in getting our help in kind of reviewing and auditing their tech and their marketing and sales tech. And so, in light of the conversation that you had with Randall Gillespie and Brian View last week, one of the things that I want to extend to our audience is the ability to have me come in and just have a free consultation about evaluating what is in your tech stack and evaluating the technology that your teams are leveraging. So if you let me pop something into the chat. If you want to schedule a time for us to have that conversation, you can click the link that I just popped into the LinkedIn chat, but it'll also be available for those of you watching on StreamYard. If you want to schedule that appointment, and then click that Calendly link. And if you use the word Praxis when you schedule that meeting, I'll knock off $500 off of the full audit report that you will receive. So just want to put that offer out there. But love having conversations with people, whether it's about branding and messaging or around how to make better leverage or how to leverage your technology even better and get a higher return on investment. Would love to have that conversation. But Melissa, thank you for asking me to be a part of these calls. And it's been a lot of fun, especially being a fly on the wall, listening to all these conversations.
Yeah, it's a lot of fun having you here. You've done a great job as our production partner, and looking forward to more fun things in the future with you.
Absolutely.
All right, we'll go ahead and let's talk a little bit more about the series. As I mentioned, this was really designed to help prepare the industry for the future of mortgage banking. And as y'all know, those of you that have been here each week, we've talked about a lot of different things to help prepare your companies, and everything from the future of mortgage manufacturing to high-tech and high-touch solutions to artificial intelligence, all things AI, also to the future of mortgage regulation. And then last week, we talked about maximizing tech adoption. If you weren't able to join us for those conversations and want to get all caught up, James also has a link in the chat for you so that you can get caught up from our YouTube channel that we've created. And then today's conversation is all around preparing your companies for the next generation, both the next generation of mortgage professional and the next generation of home buyers. So excited to kind of dig into that with everybody today. As we talk about each week, these are slated for an hour. I know everybody's time is super valuable, and so we're going to try to get out of here before that, but I don't want to miss any content that's going to be valuable for everybody. So I'll do my best to keep us moving along. I do also want to let everybody know that I am so thankful for all of your support through this 6-week series. I have been absolutely blown away by the support and those of you that have reached out to me about the series. because of all of that, we've actually decided to continue this series. So stay tuned. I'll have more announcements coming out on what the future of Future Proof looks like. So let's go ahead and get started with today's session, which is all around the next generation. So let's have our speakers come and join us. We have Jake Vermillion, who's the Chief Marketing Officer of Mortgage Champions and also a second generation mortgage professional. And we also have Kristen Messerly, who is the Executive Director of First Home IQ, and also the host of Mortgages with Millennials. So excited to have both of you join us. Really looking forward to the conversation today.
Thank you so much.
It's an honor to be here. Thanks, Melissa.
Yeah. Well, I want to, just in case the folks that are joining us today haven't met your companies before, can you do like a little bit of a brief intro for everybody? Jake, let's start with you. Tell us a little bit about Mortgage Champions.
Yeah, absolutely. So we're fortunate to be celebrating, I should say, our 30th year in the business this year. So my dad, Dale, founded the company in 1995. Feels like forever ago at this point. But in a lot of ways, many things have changed and yet many things haven't. So what we do is we partner with lenders all across the country in every different vertical: retail, consumer direct, wholesale, you name it. And we simply help them improve conversion and production across the board. So the way that we do that is we come in, we do some initial training, and then there's a lot of reinforcement, accountability. We're even secret shopping and scoring calls now, depending on what environment you're in, to make sure that we're giving each borrower and each partner the best possible experience that we can. And the results speak for themselves. We had a recent lender that we onboarded in 60 days tell us that they've seen a 38% increase in locks. That's no addition to technology, no new marketing campaigns, just improving the sales and sales support teams with the way that they're addressing their customers and their partners. So that's what we do. That's who we are. You can just DM me on LinkedIn if you want more information. I'd be more than happy to have a conversation.
Oh, I love it. That's great results. Kristen, tell us a little bit about First Home IQ.
So First Home IQ is a nonprofit focused on bringing financial literacy and homeownership education to the next generation. We're fairly new, about 2 years old now, and we approach this in two different ways. One is through the industry. We have an ambassador program where loan officers and agents participate, and we give them resources like presentation materials and social media content, email templates, things like that to help them reach first-time homebuyers, which funds our ability to bring curriculum to schools. So this year we're on track to educate 40,000 students and teachers over the year. So we're really excited about the impact and the ability to come together as an industry to solve for the financial literacy crisis.
Oh, I love that. I just got goosebumps when you said 40,000. That is really, really impressive. So excited to have you both join us. You are absolute experts on what we're going to talk about today. So, and I know we have a lot to kind of go through, but I want to, before we dig into a lot of the planned content that we have, I like to spend a little bit of time in some of these sessions just kind of dreaming with folks about what's possible in the industry, so that we can help each other to design the futures that we want for our companies in the industry. So my most favorite question to ask folks is, if you had unlimited resources, like you didn't have to worry about budget, you didn't have to worry about technology constraints, unlimited resources, unicorns and rainbows, but you could only fix one thing in the industry, where would you start? So I want to open it up for Jake and Kristen for that, but I also want to open it up to our audience. So if y'all have some suggestions on what you think our industry should be fixing, I'd love to hear from you too. All right, who wants to start? Jake, Kristen?
I want to hear Kristen's first, yeah.
It's so hard for me to zero in on something. Some of the things that come to mind are obvious for the work that I do, building trust and transparency through financial education. But I think, really looking at if we're looking at how do we fix the lack of trust between consumers and this industry, then I think that overarching, process would include financial literacy education. Some of the things we'll talk about, I think, later about integrating AI into personalization for consumers to, build a pathway to building trust with the industry. And then one of the things that I think is really crucial is looking at the wealth gap and ways that we can improve access to homeownership at an earlier stage. Some of that could be through co-buying strategies, house hacking, new products that allow people to get into homeownership earlier. So that's a lot of things under this one umbrella, but I'm trying to loop it all in.
I love it.
That's
Jake,
awesome.
what about you?
Yeah. Well, let me just say this from an industry perspective. I honestly think that like if we had no holds barred, could do anything we wanted to do, how could we fix the industry? And I wouldn't even necessarily say that the industry is quite broken, but if we could fix the industry, what I would say is we would just build a lot more affordable starter homes, if that makes sense. We would just have more inventory available for those first-time home buyers to be able to get into the home ownership game and then be able to buy up from that point. Now, that said, in our sort of little sphere of the mortgage industry, if there's anything that we could do, it would be basically putting a sales coach and really just a coach in general in every mortgage professional's pocket. We would want them to have a trusted voice that they can reference at any moment to be able to give them advice on how they approach a customer, how they approach a partner, how they deal with a file, how they deal with a colleague, how they, just improve on an individual basis their ability to be able to perform at the highest possible level and to provide the best level of service to everyone that they touch throughout in the course of their role, if that makes sense. So that's kind of what I would like to build towards on our end. But the short answer is more affordable housing.
Oh, I love that. We've got a couple of comments in the Oh, go ahead, Kristen.
So I just want to build off of that because I actually, the more as you were talking, I was thinking, what if First Home IQ had a representative, an ambassador in every city, every community across the country?
Yes.
There's something very, symbiotic around that. So
I love it.
That.
I love it. Reza in the chat says better use of technology and automation, AI on origination, compliance, and underwriting. So just improving the use of technology. That's huge, Reza. And then Brian says make the digital mortgage experience standard for all loans and eliminate stare and compare with paper docs. So both very, very tech focused and great suggestions, Brian and Reza. Thanks for putting that in. I think I will say, and I've said this before in one of our other series, I also think there's a layer to our industry where policy has to meet innovation. And so I'd say kind of eliminating, if I had unlimited resources, I would spend a lot of time with our regulators and our congressmen to help them to understand that the layers between federal and state compliance that our industry have to deal with are causing a lot of constraints. And so I'd love to see some of that streamlined and to make it easier for lenders to be able to operate their organizations. So if I could wave a magic wand and have a unicorn give me anything that I asked for, that would be it.
Housing policy. I love it. Yeah, for sure.
Yeah. Well, both of you guys started to touch on something that I think is a huge question that most loan officers have right now. Actually, not just loan officers, the industry as a whole, those that are working, whether it be in operations or in sales, are asking me all the time. We know AI is coming. We know there's a lot of possibilities around where our industry can leverage AI. But I'm really scared. I'm scared about my role changing in the future. I don't know what that's going to look like. So I'd love to pick both of your brains around this. If, for LOs and operations professionals that are with us, this is something really challenging to think about. So if you could predict the future, what would the future LO look like or the future ops professional look like?
So the future LO to me, I know we hear this all the time that AI is not going to replace mortgage professionals, but they are replacing currently aspects of their jobs, and I think that it is important to realize and to embrace AI and to take it in as like, how can we continue to make our jobs more efficient in any role actually, but I think the future LO is going to look more like a coach, an educator, and relationship builder. And those are going to be the differentiators. And so, whenever we look at the role of the loan officer, I would think about what are some ways that I can continue to make my job more efficient, that empowers the consumer and empowers me to be more of a coach and relationship builder.
I love it. Jake, how about you? What do you think?
Yeah, I wholeheartedly agree with that. And James, I hate to do this, but I'm going to ask if you could just keep me here and not make me full screen. That'd be great. I kind of bug out every time I see my face. It's so big in the screen.
I'm like, oh, it's just me now.
The future of the LO and the sales support professional and mortgage. Okay, I think the best analogy that I can think of is we're going to see our industry look a lot like the healthcare industry, the way that it's evolved over the last 10 to 15 years. Yeah. And what I mean by that is if you look at highly specialized roles like doctors, for example, which that's going to be your LO analogy, right? They are spending a lot more time doing what they were trained to do, what they spent all this time in school to do, what they're licensed to do, which is to sit with patients, to diagnose them, to advise them, and then to track their progress, okay? Just spend a lot less time charting and doing administrative tasks and ordering prescriptions and following up and all that sort of thing. Same for the loan officer, right? And we're already seeing some of this with AI. It's not that AI is coming. Frankly, AI is here. It's only just going to get better and more prolific, right? So you're going to see CRMs that are going to auto update and have better priority queues for loan officers, right? So they're going to spend less time in their CRM. You're going to see POS and AI agents, which are going to be doing all of the documentation for borrowers. You're going to see FAQs being handled by AI agents, whether that's a chat-based version on a website or a social media platform, or if it's even a voice AI that someone can dialogue with about how do I become a homeowner? And similarly, you're going to see Gen AI tools be able to sort of spit out and create not just templated content for co-marketing with partners, but personalized content for co-marketing with partners. And there's a whole bunch of other applications that we're going to see AI take over that are going to take time off of the loan officer's calendar. So the question is, what do you replace the time with? The answer is conversations. The loan officer of the future in the era of AI is going to be stacked wall to wall, day after day, with conversations with referral partners and then customers. So the best loan officers who are going to survive this transition are the ones who that's what they're geared for. That's what they're best at, is wanting to spend time with people to help them solve their problems. As far as the sales support, I think, again, the medical industry provides a good example. As we've seen technology infiltrate the medical space, what we've seen is a fragmented patient experience. And so what a lot of the best healthcare practices have done is they've instituted patient advocates to help guide them through the entire process. That's exactly what a sales support person is going to become. So they're not going to be chasing around documents. They're not going to be ordering appraisals or LOEs or LOAs or any of those things, right? All of that can be automated in the near future. What they will be doing is quarterbacking files and serving as that borrower champion to get them to the closing table and then continue to build a relationship alongside the loan officer after the closing table. So that's where I see this headed in the era of AI, is less menial tasks and more meaningful time with the people that we serve.
I love the comparison with the medical industry because one of the things I think is most interesting around the AI, growth and development is just the ability for AI to predict outcomes and treatments and identify issues better than doctors have been able to do. And that's where it's like, this is going to add so much value. And I think if we can integrate AI, with unlimited resources, we can integrate AI into the loan officers and the industry's process for consumers to be able to identify, I think it opens the door to better products and, opportunities for consumers to identify what those products are. And then work with the loan officer in that coaching process, but I think there's going to be a future where we can allow the system to be more complex because AI is there to support that, and it simplifies and eases the process for the consumer.
Yeah, I think if I could take even like a leap forward from predictive analytics and Gen AI solutions to agentic AI, if you think about how that can impact our industry, that is a platform. For those of you that aren't aware of agentic or AI or haven't heard about that in the past, excuse me, that is basically generative AI that can cross-reference by external sources other than just the internal LLM that it's been trained on. And what that does is it helps eliminate some hallucinations by getting more perspectives on things, but it also can be very interactive to the customer experience. So there actually is a POS platform that is an agentic AI solution that has come out, and here's the customer experience in a nutshell for that type of scenario. hey, let's say a customer, it's very much like ChatGPT. So a customer's interacting with a conversation with an AI agent that says, hey, I'm ready to get pre-approved. Perfect. Let me ask you a few questions. They ask the same questions a loan officer would. Then it pulls a credit report for the borrower, scans and analyzes the credit report and says, hey, I see that you had a judgment on your, a judgment or a bankruptcy 4 years ago. We'll use that as an example. Can you tell me a little bit more about that? And the customer is able to dialogue. They're able to write agentic AI behind the scenes. They're writing an LOX for that customer as they're explaining what's happening to be able to document that in the file. Then they're going out and pulling VOIE information or VOA information and analyzing that and say, hey, I see you have this extra, consistent deposit that's in your bank account. Can you tell me, are you earning income? It looks like it's from Uber, and can you tell me a little bit more about that? Or I see that you get bonuses. Can you tell me a little bit more about that? And it's very interactive. Now, to both of your points, right? The loan officer is now put in a position where they have all the information on that loan file, right? They're able to analyze the scenario. They're able to better suggest things to the customers that might be exactly what they're looking for. And so I think that customer experience is able to be kind of taken to the next level. But solutions like that, I think, are really cool to kind of think about, because roles, I think, are changing, as both of you mentioned, so fast. And it's kind of important to see how we can input technology in that and how we can kind of slowly progress towards some of the more, some of the ways where loan officers can be, always at highest and best use in building those relationships in the culture, or that kind of relationship with the customer. From an operations perspective, the one thing I see coming to, for those of you that are on the call that are in ops, those roles are also changing. I think there's going to be some new opportunities in operations that come up, particularly the more our industry leans into generative AI solutions. I also think there's going to be a role that is kind of a QC for AI. So if you have AI making a decision for your organization, you want to be able to test that decision is being consistently made by a generative AI platform. So I do think there's going to be, even though there are going to be roles that are changing, there's going to be new opportunities that come out of all of it. All right. So we talked a lot about sales, we talked a lot about operations, and those roles kind of changing. One of the other things that I've seen and heard a lot from lenders on is this whole concept of like housing made simple. There's these kind of platforms that are putting together, financial literacy to your, credit, Kristen, and mortgage and your home purchase and servicing, kind of all in one kind of giant offering for buyers. If you were a technology leader or a mortgage executive today, I'd love to hear from each of you, like what really excites you about that opportunity? And then how can you best prepare if you're not going to lean into that, big opportunity? How can you best prepare to kind of compete against those platforms? Jake, you want to start with that?
So I can, but I actually have some cautions for technology leaders on this front. So if we want to stick with what's exciting first, maybe Kristen wants to hit that, and then I'll come into the back end, or we can start with cautions. Whatever you prefer.
Okay, start with cautions. Let's see.
All right.
I'll add excitement later.
So I thought a lot about this question after you sent it before our call today, and I think there's a big difference between home ownership made simple and home ownership under one roof. Okay. Yeah. Just because someone aggregates all of these tools, all these platforms, all these systems into one ecosystem, whether that's fully white labeled, proprietary, partially white labeled, you name it, doesn't necessarily mean that you've achieved simplicity of home ownership, in my opinion. Okay, I think that's a myth that we need to dispel. So yes, of course, as a technology leader, you have access to more tools, and we're going to talk about this a little bit when we get into local loan officers. Local loan officers also have access to more tools to be able to build an end-to-end home ownership ecosystem for their customers and their partners than ever before. And if you're a technology leader at an IMB, credit union, bank, you name it, it is your responsibility in this marketplace to be competitive, which means you have to start putting together that end-to-end ecosystem. But just putting the pieces in place. You have to go further than that. You have to become, once you get everything in place and you start having, customers navigating this ecosystem, you have to religiously test and survey their experience to find where there's still touch points that are, have friction or cause frustration or result in confusion. Just because something is faster or more convenient in accomplishing it technologically doesn't necessarily mean that it's producing simplicity in the mind of the borrower. One quick example, credit pulls, right? Credit pulls have been made very easy, even well before the advent of AI. And yet many customers still have a poor experience around the credit pull because loan officers do, on average, not a great job educating the customer on why they need to pull credit, what the impact of pulling credit is, what's going to happen, or what resources they'll have access to if the credit score comes up short of the thresholds that are needed for whatever it is that they're exploring. So there's a partnership between the technology that makes a click of a button to pull credit, right, possible, and the people around that technology who ultimately have to present it to the customer and contextualize it within the homeownership journey. So yes, put all the pieces in place, build an end-to-end ecosystem, white label it if you can, but go beyond that and continue to investigate where are there places where our customers feel that this process is not simple, or they need greater clarity or greater confidence that they're making the right decision at the right time and moving closer to the closing table and not further away from it. Does that make sense?
I love it.
And
Yeah.
that is exactly what excites me. Like the idea that we now have the ability to pull together all of these technologies developing at a speed that finally I think is catching up with what consumers are expecting. And we've been talking about this for so long that the whole experience is so all over the place and consumers are, feeling like it's complicated. They don't understand, why do we even need to know about certain things happening in the background? And now there is the opportunity for a consumer to come in and just get what they need to know while the safety is happening behind the scenes. And but to your point, Jake, that is a problem that needs to be solved on a continual basis because technology is continuing to speed up and yeah, it's not working all the time or most of the time probably. But I think that's a really exciting problem to be solving for. So both from the technology perspective and from a mortgage executive's perspective.
Yeah, well, or it is working, and there's just unanswered questions in the minds of the borrower, right?
Yeah.
I mean, another example is, connecting a bank account to automate income verification. Like that exists today. It's extremely easy. It's existed for a long time. And yet, I know you talked with Joe Pacquiano about the fact that like there's still low utilization of that technology because there's a human apparatus that has to be wrapped around that technology to explain to a customer why it is what you're doing, you know what I mean? How it's going to make the process easier. I mean, all of those sorts of things need to be accounted for in a plan that a CTO, for example, is going to put together of how they're going to take their organization into the future, if that makes sense. So
yeah. Exactly.
And that brings up a good point around understanding the different segments of your consumers, because, a first-time home buyer that is maybe a millennial or a Gen Zer is most of the time going to be like, yeah, obviously I'm connecting my bank account for you to, take a look at that. Like there's no question. In fact, we feel less comfortable giving you or talking to a person about that. So, but then you have a variety of other backgrounds, age, ethnicity and cultural backgrounds that might create distrust around using a technology platform like that. And so I think now we have even more, it's more important than ever to understand the backgrounds of your consumers and how to build trust in a variety of different ways.
Couldn't agree more.
Yeah, I love it. I think I talked a lot about in our last session about how consumers are really looking for this Amazon experience with human in the loop. The complexity behind that is that everybody's going to want a different part of the process to tap out. They want a human in the loop when they need them, right? And not when we've just created this funnel for a human to pick up the phone. And so I think as an industry, we've got to start to think about how do I create flexibility and my consumer experience through technology to make sure that we're reaching them at the points that are going to be most impactful for them, a personalized experience by leveraging technology for it. So I love that. So if you were a local loan officer, and you talked a little bit about this, Jake, are there things that you would really lean in to try to, kind of compete and position yourself against these kind of larger models. Is there anything else that you want to touch on there?
Yeah, I mean, first and foremost, I would just say use a local loan officer. You can compete.
Yeah.
Almost all of the major tools that we're seeing being sort of brought under one roof by the largest lenders in the country, there's some form or fashion of them that's available to the individual local loan officer. Okay, so every loan officer in America today has the ability to be able to stand up technology to be able to nurture early funnel borrowers, right? There are tools that they can provide their borrowers to be able to monitor their credit, to be able to, build a budget, streamline unnecessary expenses, save for a down payment, educate themselves on the home buying process. And there are tools on the back end as well to be able to monitor their home's value, to be able to look into how much of their equity they can tap, to be able to model out what a refinance would do for them, how they could pull out cash or potentially reduce their monthly payments. Same for a HELOC or a home equity loan. So all of these tools are available in a lot of ways, and there are even tools for automating the actual sales and compliance process as well to make the ingestion of like LOEs easier, or to be able to verify income easier. Like there are an amazing number of tools available to the local loan officer. So I would say, believe that you can compete, put the tools in place to be able to compete, but then don't give up your ultimate advantage. If you look at what these large lenders who are aggregating all these tools and building these proprietary platforms are doing, they're investing in retail, they're buying brokerages, like they are trying to get down to what you have, which is the ability to be able to face-to-face with partners and customers.
That's right.
So yes, as a loan officer, put these tools in place, but the reality is like too many local loan officers have basically confined themselves to being one-man call centers operating out of their living room or home office. Why would you do that? You know what I mean? Where we're seeing local loan officers win with the retail orgs that we're working with is they are out in the community. They are doing open houses. They are spending time off hours, if you will, with the referral partners. They're hosting meetings at their office. They're even offering to take applications with a customer face to face. And they are attending every single closing for every borrower that they work with. If you get a little bit old school and combine it with these new school tools, you're going to be a loan officer that these larger lenders can't beat. And we know that because if you look at retention rates, so far as I can tell, retention rates in this industry have only gone down as technology has advanced. Okay. So there's a disconnect between providing a more seamless customer experience and retaining that customer for life. What's the disconnect? It's just being in touch with them. It's picking up the phone and just saying, you walked across my mind. You know what I mean? How's life? Has anything changed? I just want you to know that I'm always here to answer any questions you have and to explore how we can make your home more beneficial for you. If you're willing to put in the time to have those conversations, there's a couple of conversations a day, right? You're mostly going to hit the voicemail box anyways. Just pick up the phone, make a couple calls a day. You will retain your customers for life, and you will have that local advantage that they simply can't replicate. So that's my advice to the local loan officer.
Completely agree. Dave Savage actually has this great analogy, which he used in, I think, our second week. He said, I want everybody to write down WACD, which is what Amazon can't do. And if you focus on those things, right, then you're going to be in the right places that technology is not serving, that you can be uniquely positioned to serve. I'm sorry, Kristen, what were you going to say?
No, that's this is what is really interesting is we've been talking about AI and technology, and that's exactly my answer, what Jake was talking about, of getting out in the community. I think that it's an interesting time where we're going to see this continue to develop is that the local loan officer who has the community relationships and builds trust being out in the community in these very traditional ways, I think a lot of times, is who is going to win, in also pairing with good technology. But in our ambassador program with First Home IQ, we see people winning by doing presentations and first time homebuyer workshops, partnering with trusted organizations. And that was a big thing that I did in my work with cultural outreach years ago, where I would help lenders in reaching underserved communities. It was all about how do you identify groups, organizations that have trust in their community, and you partner with them and you're active with that organization. And now it's very similar with how we look at even reaching Gen Z. It's not just in person, it's also social media and identifying, ways to build trust, but it's just a difference of platform, So I think it's going back to absolutely some of those really traditional but systematic ways of approaching reaching first-time home buyers, but also beyond, by staying consistent, showing up in your community, building partnerships and relationships with people who have trusted communities. And that's what's going to help you win.
I love it.
Well said.
Let's talk a little bit about first-time home buyers. The average age of a first-time home buyer right now is 38. Mm-hmm. So it has gone up pretty drastically over the last few years. That's on the older side of the millennial generation, but we also know that Gen Zs are starting to think about homeownership a little bit too. Both of those generations, though, also have some significant concerns about, if homeownership is actually attainable for them. And I know, Kristen, you've done a ton of research on this, so I would love to hear your thoughts on maybe some of the data from your Next Gen Homebuyer report. Maybe you can share that. I know that's been out for a few months now. What are some of the barriers that these, generations are facing?
Yeah, so I've been surveying millennial and Gen Z consumers in an annual report over the last 5 years. And at this point, have surveyed over 7,000 millennials and Gen Z. And this year in March, we released our latest report. And we found that what's consistent is people still want to be homeowners. 95% said that they still want to own a home someday. But what has consistently shown up is a decrease in their thought that they can access homeownership. So 95% said they want to, 35% said that they think it's only a dream. So they don't feel like they have access. I think it was, I have it here. 45%, less than half, are confident in their ability to buy a home in the next 5 years. And then there's also not just a lack of confidence in their own ability, but there's also a lack of confidence in their own knowledge about buying a home. So there's, oh, this is probably out of reach for me. Also, I don't know what I'm doing. So there's a lack of financial literacy. And then you add to this horrible trio that there's a lack of trust in the industry itself. And that's something we've seen dropping over the last 5 years as well. This year, it's at its lowest it's ever been, with only 20% saying that they trust loan officers to help them make smart decisions about their mortgage. And so, what that tells us is if someone doesn't feel confident in the market themselves or a professional, then they're absolutely not going to enter the market, even if they want to. So, again, it goes back to all the solutions we've been talking about. If you build trust in the community, you build those relationships, then you're a bright, shining light in what feels like a very dark space. And that differentiates you and creates huge opportunity with a population that still wants to own a home.
Yeah, it's so funny to me. Funny is not the right word. It's interesting to me. the trust for the loan officer. I think that there's been a pretty significant decline in that over the last couple of years from what I remember reading in your report, Kristen. So if you were a loan officer today, how do you make sure that how do you bridge that gap? How do you make sure that you're building trust out of the gate to help these particular generations feel very confident and comfortable in their ability to attain homeownership?
I think it's all the things we've been talking about, by the transparency through technology, the being active in your community, building trust with people who already have trust with consumers, thinking outside the box a little bit with that. I really like the approach of going into schools. That's, of course, a lot of our mission with First Home IQ, but we've seen a lot of our ambassadors see that helps them with their business as well. It builds relationships with teachers, families, parents, also going to the parents in their database and saying, well, I'm going to host a, webinar, bring your kids, and it creates top of mind awareness and educates the next generation. But those are some of the specific tactics. I think, it does go back to some of the traditional ways that you can be in front of your community and just continue to push out that, being that coach, that educator and relationship builder. But Jake, I'd be curious your thoughts on that.
Yeah. There's a lot more that can be done here, frankly, to be in our industry. As far as how do we instill confidence and trust in this next generation of home buyers, I think, I like to use the 3 T's. We need to provide tools, we need to provide tips, we need to provide timelines. Okay. So one of the key things that we can do for a buyer who's thinking, do I even, is there a possibility for me to ever at some point own a home? We've got to clarify the timelines. What are the milestones to achieve home ownership? Break those down for them. And then that's where the tools come in, right? Because now we equip them. Okay, here are the milestones of what you need to do in terms of savings or your credit score, whatever it is, right? Now let's give you some tools to be able to track towards that so that they take some ownership. They're able to see that progress. They're able to like get some momentum going, if that makes sense. And then of course, along the way, we're going to arm them with education, right? We're going to give them tips on how do you navigate all of this? How do you maximize that credit score? How do you maybe streamline, your savings to be able to save more for a down payment? And even just on the purchase side, like, let's talk more about the down payment itself. How much should you actually be putting down? There's a common misconception still from many people that they need to put 20% down. We know that's not true. We need to communicate that better. There's obviously many more programs than just that. But even if you can dispel the myth that you have to have 20% down, many buyers are still feeling compelled to get 20% down because they think, okay, home prices are high, mortgage rates are high. I want to have the lowest monthly payment possible. And so what I'm going to do is I'm going to put down 20% so that, I'm financing less and I'm going to not have PMI. Okay, well, we can do the math and look at some scenarios where, especially if they're carrying high interest credit card debt, which many consumers are, in addition to student loans, auto loans, you name it, there's a lot of situations where putting less down and dealing with some of that debt in the long run, even if you're going to pay PMI, actually your total debt payment that you're paying month over month is significantly less in the short term, let alone the long term. Okay. So there are strategies that we can arm our borrowers and our referral partners with to be able to educate this next generation of home buyers and give them some confidence that they can, in fact, actually walk through these milestones and achieve home ownership. The second thing I would say, though, is we've got to change our marketing as lenders, right? If you look at the top level CTA, the call to action for most lenders, it is still, even despite what Kristen just said, look, we know over 50% of the agency's latest borrowers are first time home buyers. Okay. 25% of that was Gen Z. Kristen just said 6 out of 10 of their respondents feel that they don't know how to go through the process. They're not educated on it. And more than half feel that their homeownership timeframe is more than 5 years out. Okay. And yet the first thing that we're telling most borrowers to do when they engage with our marketing is to apply now.
Mm-hmm.
That is a huge disconnect. Like marketers at lenders need to do a better job of creating copy that, first of all, is more aspirational and speaks to this desire to either own a home in the first place or leverage their home as a better asset to achieve the life that they want. And then secondly, when someone engages with that content, to be able to push them towards a personalized homeownership or home asset, leverage journey, so that they can really understand on a personal scale, what does this look like for me and what is required of me, and how will you as the lender partner with me to achieve whatever it is my ultimate aim. So, lenders need to rethink their marketing entirely, and then they've got to rethink sales because, and I'm going to stop after this because I've been talking a lot, but if you put out marketing like that, right, that's aspirational, that puts people on a personalized home buying journey, and then they finally get to the point where they're ready to connect with the loan officer, and the first minute of the call is that loan officer interrogating them about their credit score, how much they have saved for the down payment, their job history. What have you done? You've completely eviscerated that trust. They're going to not only ghost that lender, there's a good chance that borrower is going to write themselves out of the potential for home ownership for years to come. They won't engage with any lender after that experience. We have a responsibility as an industry, as individual professionals, as companies, to the American people to do this better, to have a more seamless experience and to partner with people and not interrogate them, right? And position ourselves as gatekeepers instead of doors that they can walk through to achieve their dreams. Make sense?
Oh, that's so good. Yes, that is.
Sorry, a bit of a monologue. I don't mean to get hot underneath the collar.
No, I feel like we needed a mic.
And share it. Yeah, exactly.
We can do so much better here. And there are companies who are doing this, but we can all do so much better here. And I get excited about the potential for us to do this better. And I know Kristen does as well.
Yes. And one thing I have really liked some loan officers talking about creating a homeownership plan for the future rather than it being like, when you're ready, talk to me. We've been so short-sighted around it necessarily around the timeline. But if we talk about, let's make a plan for the next 5 years or 10 years for you to be able to buy a home, a lot of people don't realize they could buy today. And I think you'll find that a lot of people would actually fit into that shorter timeline if you opened that door like Jake was talking about.
Couldn't agree more. Yeah. Just because people say they think they're 5 years or more out does not mean that they actually are.
Yeah.
100%.
Wow. Okay. I don't even know where to go from that. There was 10 mic drop moments throughout that whole conversation. That was awesome. Well, let's maybe get a little creative about some of the things you guys are seeing this next generation lean into to maybe shorten that window of homeownership attainability, right? I know I've been reading a lot about house hacking. I can't even talk today. House hacking. But there's a lot of other solutions that folks are leaning into too, to just try to get a little bit more creative and make, homeownership a little bit more attainable for them. Kristen, I know you talk a lot about this in your Mortgages with Millennials podcast too. So let's start with you on this. What are the things that you're seeing this next generation lean into to maybe shorten that window of what they think is attainable for homeownership purposes?
Yeah, I would say that especially the younger, like Gen Z, are really open-minded about different strategies. Everyone just needs to know about them. So this is all limited to what they know about. But yeah, one of the things that came up in our report was that 32% of Gen Z said that they were open to co-buying with friends or family as an approach to getting into homeownership earlier. And I think that that's something that is going to be more attractive to a younger population, but also there's a lot of startups and, Crib Equity is one that we partnered with that also allow, Nestment is another that's great, that allows people to get into homeownership through an external investment. And I think that looking at some of the equity sharing models and things like that are available now would be a great direction for us. In addition to, like you mentioned, the house hacking and just understanding some of the strategies around renting out a portion of your home or, things like that would be, if people, or even down payment assistance, that's still like so basic and still so many people don't know. In fact, in our quiz, First Home IQ quiz, people still, like a majority of people don't realize you can put less than, I think it was like 70% think that you have to put 10 or 20% down to buy a home. So just that alone would be a really great strategy that people need to know about.
Well, and that loan officers and lenders need to get better educated on as well. Understanding your local opportunities for down payment assistance, most of those are county and state level, some even city. And so, depending on your area, there could be a lot of different opportunities for you to help homeowners with down payment. Jake, what were you going to say?
Yeah, no, I think Kristen touched on a couple of the ways that we're seeing the next generation get creative around home equities. This idea of fractional home ownership, the one path being co-buying with, friends or roommates or whatever. And the other path being you bring it in, an external investor. They're bringing upfront capital in essence to help with down payments or the cost to close. And then they're taking some share of the home equity on the back end, if that makes sense. So, that's certainly one thing that we're seeing people express interest in, and companies are building products around that. I think another aspect of this sort of creativity in the next generation that we need to think about is something that lenders are dealing with every single day, which is the diversity of income streams, right? People are getting creative, not just with their equity, but with how they actually make money. And so as an executive, I think you have a responsibility in this marketplace to think about your product diversity, to think about your underwriting technology and process, to maybe look at some AI solutions that would make it easier for you to verify non-traditional income, people ingest LOEs, for example. So there's a lot that can be done there as an executive. The one challenge that I would have for the executives of the industry is asking the question, why do the next generation of buyers feel the need to get so creative around approaching homeownership? I think we have maybe not done a good enough job challenging narratives that are out there in the mainstream media, especially, that homeownership is simply unattainable. It is harder to attain than it has been in the past, right? If you look at affordability indexes, the least affordable year on record was 1983. Second to that was last year, 2024. Yeah. So it's a challenge. I'm not denying that. We have inventory challenges. Home prices are high. Rates are high. There's a lot to consider, and we need to meet borrowers where they're at. But we have to get out there in terms of like the media, social media, our marketing as lenders, the conversations that we're requiring our salespeople to have, especially with prospective buyers, not even necessarily people who are in pipeline, and then even just getting to Washington and speaking with the representatives. We've got to do a better job as an industry, and I think executives have to lead the way in challenging this narrative that home ownership is unattainable, and so then we should just be okay with the next generation having to get creative and settle for fractional home ownership instead of total home ownership. I think we need to challenge that, if that makes sense. I'm glad that there are products like Crib Equity is amazing. You know what I mean? And there are others like it. And I'm glad that we have those, especially for the least affordable markets in the country. You know, you think of like where Crib Equity came from in San Francisco, the Bay Area, like it's difficult for even someone who makes a lot of money to be able to purchase a home. So to have a little bit of help and to be able to shed a little bit of, like, that's great. That's a great transaction. You know what I mean? But nationally, I think we have to find a way to re-cement in the minds of Americans that homeownership is still the American dream, that we still want it to be the primary wealth building tool for most Americans, and that, you know, we're here to help them achieve it, and that we have solutions for the problems that they're facing.
Yeah, I love it. Kristen, you look like you were going to chime in.
No, I guess I would just confirm everything he's saying. So yeah, no, it's great.
I completely agree. I think, you know, we, as an industry, we try to lean in and help as many buyers as we can. And I know buyers feel like, especially in those higher price markets, that homeownership is such a challenge. And we know really what's driving that is inventory and rates, the combination of the two, right? And we can't fix all of those things. That's it. We can't fix all of those things. And so I think, you know, we've leaned into how do we help buyers get creative instead of maybe changing that narrative, as you were talking about, and helping them to understand how they can put themselves on a path towards homeownership that's realistic and reasonable for themselves and their goals. And so, yeah, I love it.
Well, and if I can add this, if nothing else, if you're going to lean into some of these products towards fractional home ownership or home hacking, right? Establish a plan at the point where you're getting them into that fractional home ownership for them getting to total home ownership, right? Mm-hmm. And build that relationship and that trust so that you're going to be their preferred lender and financier when they get to that point where they feel they have what they need to own the full home and not just part of it. So I'd say that as well.
Yeah, I completely agree.
I think there's, sorry.
Go ahead,
I was just going to say, I think it's about having the tools in your toolbox. I mean, even talking about fractional homeownership might help people get into the pipeline and then be able to create a plan that goes to total homeownership, you know, but I feel like we need to have more tools in the toolbox around financial literacy and, you know, trust building and just products in general. And even, you know, things like down payment resources, like someone might not need down payment assistance, but being able to talk about it and evaluate those options, really, that's what a good advisor is today.
Yeah, I couldn't agree more. I think for, the last, I don't know, it feels like 10 years almost, our industry has been at this point where rates have been dropping kind of consistently. And as rates have gone up, we've shifted our mindset. Our loan officers have to shift their mindset now to be more advisors, to be intentional about helping folks to understand what's happening in the marketplace, to help them to understand all the products that are available to them, how they can, and actually I'll take this even a step further, digging into the things that we used to talk about with them all the time. What are your 3-year goals, your 5-year goals for homeownership? Like, how long do you plan on staying in this home? So that we can make sure that the options that we're giving you are the right options, right? Yeah. You know, especially around mortgage insurance. I mean, you know, there's options for financing, you know, upfront MI versus monthly MI. Like we can get creative, so to speak. And I use quotes, like it's not really creative, but we can be intentional about making sure folks understand all of their options, including some of those ones that aren't just a 30-year fixed rate that's, you know, doesn't have MI on it because they put 20% down.
It's such a great call out. I mean, even just look at what we talked about earlier. The average first-time home buyer's age is 38 years old right now. Far and away, the most common product that we sell as mortgage professionals is a 30-year term. If you sell a 30-year term without even thinking about it to a first-time home buyer who's that average age, are they retiring before or, are they debt-free before or after retirement age? After. Yeah. Like creativity doesn't have to be just, sort of relegated to these, fintech startups and these cool companies like Crib Equity who are, exploring fractional home ownership. It also comes down to the individual loan officer and how they're just thinking about and solving for their everyday borrowers' needs. And that can be as simple as exploring something other than a 30-year term, So yeah, I couldn't agree more with what you just put forward there, Melissa, that creativity needs to span across the organization, not just be at the C-suite level when you're thinking of what are the products that I provide my team, which obviously it's important there, but it's got to go further down than that.
Yeah, completely agree. If you're a loan officer and you don't understand some of the fractional ownership or some of the products that we've talked about today, I'd heavily lean into that. Educate yourself and educate your borrowers on all of the options that are in front of you. So, all right, we are just about all up at time. And so I just wanted to say thank you so much to Kristen and Jake for taking your time and sharing so much of your insights. I can't tell you how many amazing mic drop moments we had during our call today. So thank you guys for sharing that. I appreciate it.
Thank you so much for having us. This has been so much fun.
It's an absolute pleasure. Thank you for putting the series on. I've benefited a bunch from it. It's an honor to get to sit with Kristen. Anytime I get to learn from Kristen, I'm excited. So if you haven't already, go check out First Home IQ. They're doing the most amazing things. And of course, have a conversation with Melissa about how she can help you as well. So Melissa, thank you again for having me. It's been an honor.
Completely agree. Love it. Looking forward to the future of Future Proof. And again, appreciate you guys joining. And thanks everybody in the audience for joining us as well. Looking forward to seeing you guys again soon. I hope everybody has a good afternoon. Bye, everybody.